Good afternoon, everyone, and welcome to the Monday Open. My name is Mark. I'm part of the private client group here at Vantage Markets Australia. I'm based in Melbourne. We also have my colleague up there in Sydney. How you going, Jeff?
I'm good, mate. How you doing?
I'm good, mate. I'm good. So the Monday Open is held every week at 3:30 p.m. to discuss important economic events and how they impact markets and prices. So the way we're going to structure things today is we're going to be covering what's happened last week and over the weekend, what's upcoming this week, a bit of technical analysis, and some Q&A at the end. I'll pass it over to Jeff.
Cool. All right. So normally we leave this a little bit off, but we did have quite a big weekend for market moving news. The first one was the partial result of the Japanese election. The Liberal Democrat Party is set to lose its majority there in Japan. The actual result is also in dispute at the minute, so no one's actually been anointed as a clear leader. That's interesting in Japan because the LDP has pretty much been the leading party in Japan since World War II. I think barring 2 or 3 elections where they were dusted, but then just came straight back in. So for the last, call it 60, 65 years, we've had very strong consistency with the political party leading the fourth biggest economy in the world. And now that's a little bit jittery. So obviously the result for that was a little bit of yen weakness. We saw a new recent high on that move with the dollar being very well bought up this morning. That happened straight out of the chute this morning at like 5 o'clock Eastern Standard Time. We also had a little bit of an attack from Israel into the Iranian defensive and missile construction facilities over the weekend. That's an interesting one because normally when when one country attacks another country in the Middle East, the price of oil would go up. But this time it had the opposite effect. The thinking of the markets was that, excuse me, by them knocking out the missile construction facilities and their defensive facilities, that there would be less chance rather than more chance of Iran retaliating on that. So preemptive strike, I guess. That saw oil weaken into Asia, gapped lower and weaken into the day here today so far. And just also on US presidential election watch, we're 9 days away. It looks now in the press that Trump, in most polls, is clearly ahead. Not by a lot, but still clear enough. It's more than the margin of error, which is the big difference. We'll talk a little bit about that down the track. But that was what happened over the weekend. So yen weakness and oil weakness to start the week here in Asia. So last week, the big events were the 50 basis point rate cut by the Canadian Central Bank. That was as expected. We had, I think, straight out of the announcement, there was a little bit of Canadian dollar weakness on that, but it did come straight back afterwards. I think, honestly, it was just so priced in that the markets had an initial reaction to it and then realized that best practice was a little bit more unchanged. I think actually on the day, the Canadian dollar, which we call in the markets the loonie because the loonie bird is on the $1 note, actually finished firmer on the day after a rate cut, which is something that's really quite rare. And it shows that the central banks are doing a pretty good job at flagging what they're doing over there in Canada. We also had last week was PMI week, so we had French and UK PMI weaker than expected. German PMI was stronger than expected, but honestly, the German economy is so bad at the moment that I think expectations were just really low on that one, and they managed to beat the very, very low expectations. The upshot of that was that the euro finished slightly weaker on the PMI day, and the reason for that was on that Thursday was US dollar strength. So the US dollar strengthened despite initial claims coming in a little bit weaker than expected as well. Those claims numbers had been really quite strong for the last couple of months, and the markets just saw that as a little bit of a bounce back and a little bit of a consolidation from the recent strong numbers. That was last week. The big events for this week we've got is the Australian CPI number. Players are going to be watching how close to 2% that number actually prints. 2% is the target number for for the Australian RBA to see if the RBA is going to give us that rate cut before the end of the year, or if it's going to be early next year. We also have the Bank of Japan to announce on rates. The market is kind of the posture that the next movement on Japanese rates will be higher, whereas the rest of the world is cutting rates. But no one is really sure as to when that's going to be. My personal view on that one is that we'll get some sort of a rate hike in Japan before the end of the year. Whether that's going to be this week or next month is out of my frame of reference. But as Mark and I were talking before we kicked off, the US non-farm payrolls is the big ticket item for this week. Mark, did you want to talk about that one?
Yeah, sure. So, yeah, US non-farm payrolls is going to be a big one this week, depending on what numbers come out. Uh, I guess the Fed will decide on whether they're going to cut 25 basis points or 50 basis points. So I think those figures will be very important on Friday.
Okay, and we've had them stronger than expected the last 2 months as well, right? So the market is expecting a firmer number. So I guess risk to disappointment is a little bit higher than it has been the last couple of months. So
Yeah, correct. Yeah,
strong payrolls would be US dollar supportive, and would probably also help the Aussie dollar, to be honest with you.
it will.
Being
Yeah.
one. All right, good. So that's the weekend last week and this week. Let's talk some technical analysis, Mark.
Okay, I'll just share my screen. Do you see that, Jeff?
Yep.
All right, perfect. So we're going to go over USD CAD, gold, and euro against the Japanese yen. We'll start off with USD CAD. So with this pair, I mean, it's the US dollar has been dominating. You've seen here, it's come up. That's primarily based off CAD weakness. So Canada cutting rates by 50 basis points. And also indicating that it's going to cut rates further down the track. So the CAD weakened against the US dollar. Also, oil prices didn't help this one. They dropped on the weekend, and it also puts pressure on the CAD as well. The lower oil prices will decrease the value of the CAD as they export oil. So we do have a big resistance level here, though. You can see it's reacted many times in the past. So 1 time, 2 times, so about 6 times. So this is the 6th time here. So you got about 139.77, 138.39. Now it's uncertain if this is going to sort of react off this. The big one will be non-farm payrolls on Friday. I think if it was really to sort of react, it will react off non-farm payrolls. It may even sort of break out from here, come back, retest this area, then continue. If this does reject this area, you got here a support level at 134.83, 1.3404. We'll quickly go down to the 4-hour chart just for a closer look at price action. So you can see here it's reacting off the 50 EMA, so it's actually acting as a bit of a support there. Now, if you put in the RSI, I'll just quickly add it in now. So that's the relative strength index there. It is a momentum indicator, so it doesn't indicate overbought and oversold conditions. So you can see here some bearish divergence. So what that indicates is that essentially the market's running out of momentum. So you can see here price has made higher highs here and higher highs here, but on the RSI it's actually made lower highs. So that's bearish divergence. But yeah, it's anything can happen from here. It just depends on the data. You could even
What
draw
moving
in
average
a
is that, Mark?
Fibonacci retracement. That's the 50 EMA.
Works really nicely there.
It does, yeah. Let's have a look at gold now. So we did almost have a head and shoulders pattern, but it sort of violated that pattern by breaking that right shoulder here. So that's no longer valid. But we are consolidating here at this level. We did make a high of 27.68. Now, if you look at the hourly chart, you can see that we've made a support level here. So if we do come test this region, then we may see a bit of support. Otherwise, if we do break that, we can see support level here at 26.85, 26.71. Now, the interesting thing with gold is that we've also got some bearish divergence here. So we've made a high here, another high here, but this is made lower highs. So again, it's an indication that it may be running out of steam. You can also see gold here supported by the EMA. So this is very interesting if we get to here. If it breaks here, then yeah, we can see this level here play out. Okay, now euro against the Japanese yen. So this pair here has so yen weakness has pretty much allowed this pair to rally like this. I mean, given what's happening in Japan at the moment with the elections and the uncertainty, we've seen it break out of this zone here. We did consolidate within this zone, and then we broke out, came back, retested, and now we're sort of on our way back up. Next potential resistance will be 168.47, 166.80. If we drop down to the 4-hour chart, have a look at price action, you can see the retest here when it broke out. We did retest these levels here. And yeah, I mean, if it does sort of keep going, we could see some resistance above here. Otherwise, if it pushes back down, we could see this support level play out. We also got the EMA here as well. And that's pretty much about it, Jeff, for the technicals, yeah.
All right, good. I like euro yen. It's kind of more of a pure currency because it strips the dollar out. When you're trading euro against the dollar or the yen against the dollar, it's they tend to move the way they're supposed to. But the euro yen, when you take that dollar out, you've got pure moves sometimes.
That's correct. Yeah, we do have cleaner moves. Yeah.
All right,
So
good.
I'll pass it on to Jeff. Yeah, to start off with the question and answers.
All right, good. So we had we always, Mark and I are on the phones all day, so we had some questions from clients that we thought the answers would be more useful for a broader audience. So question number one, in the US election, who is better or more beneficial for markets? Is it Trump or Harris? This has been a very interesting presidential campaign because they've both kind of just gone tit for tat, saying the same sort of things. Trump is kind of renowned for his love of tariffs, the 1970s policy that won't go away. Both of them have promised tax cuts. Harris's tax cuts are going to be more around for the middle class, whereas Trump's tax cuts are corporate tax cuts. I think that's what he's promised. Broadly, I think for equity markets, because of the corporate tax cuts, Trump would be better for the equity market. And because of the tariffs, that's probably going to be a negative on the currency for Trump. Having said that, tariffs are generally inflationary. So if he doesn't initiate tariffs, I think the market would be very, very cautious about expecting the big swag of rate cuts that we're expecting out of the Fed anytime soon. So I think that might be dollar positive. I mean, who knows? I don't think Harris is actually particularly positive for any asset class. I mean, she hasn't really stood up for anything in particular other than, she's American and just very general blasé stuff. I mean, it's been a very negative campaign against Trump, which you can understand, but still, she needs to stand for something as well. So anywhere in the world as a political leader, it's very difficult to win an election if you don't stand up for something in particular. Question number two is a technical question, Mark. Did you want to look after that one, mate?
Yeah, sure. So this is from one of my clients. How many touches of a trend line is needed to make it valid? This is very subjective. So it's, I mean, if you were to read a technical analysis book, it will tell you probably 3. So a good rule of thumb will be 3 as a minimum. Obviously, the more touches, the more stronger the trend line. However, there's nothing wrong with 2 touches depending on the setup itself. So there's no sort of like right and wrong answer for this one. But yeah, as a good rule of thumb, I would say minimum 3 touches.
But like anything, right? So I mean, my view is that the more touches, the better, and the longer the time frame, the better. So a daily trend line is always going to be more well respected than a trend line on those 5 minute charts that our clients keep looking at.
Yeah, exactly. I mean, not only that, you got to sort of like see whether it lines up with previous structure, whether there's a fib in there as well. The more things you can line up, the more stronger it is.
Absolutely. Absolutely. All right. Well, that just about wraps it up for today. Thank you for listening. When this is finished, it'll be uploaded onto our YouTube channel and will be also uploaded onto our trading room. Just while we've got you here as well, we'd like to always go through some of the ways that we do help our clients, particularly our clients that are newer to trading. We have a VIP trading room, which Mark and I are logged into all day long. We can answer questions on that one in there. We also have some analysts from the Everest Fortune Group. They're logged into there most of the day. I think they kick off at about 10 o'clock Eastern Standard Time. They're in Singapore. They work very closely in the hedge fund space over there in Southeast Asia, and they're very, very handy at answering questions as well. They can provide some analysis too. We also have our weekly technical video, which is uploaded every Monday, but not Monday this week. I think it's going up tomorrow because of a holiday where it is produced. And we have our private client daily update, which is written by Mark and I every morning. Mark's on that one this week. And that's sent out to our list of people who want to receive it via email, but it's also posted on our VIP trading room. So if you want to be added to the mailing list, please do reach out to us or even just leave a note in the trading room and we can add you from there. So in terms of what do, we do proactive outreach with clients, educate, inform, talk about market movements, what's going on in the market, and my bent more than in anything else is fundamental stuff. So I like to educate on how interest rates have a big impact on currencies, and how the broader things like elections and equity markets have an impact on currency. So we do it. I guess we both have our own style around that, and we do it a little bit differently. But we're always talking to each other all day long as well, and we're always sharing the love too. So that's it for today. Thank you very much, Mark. I'll see you later.
See you next week, Jeff. Take care.
See you, mate. Bye-bye.
Bye.